Hello, Pat. Hello, Aaron. And hello to all of our many listeners. Welcome to episode 33 of the Wealth Amplifier podcast. Good to see you guys. It's been a while.
It has been a while. I've heard it from the listeners. Where you guys been? So here we are. We're back.
Well, we've, Pat has taken over just interviewing great guests left and right. And Aaron, we've been pushed to the sidelines, but I can handle it. We're getting better feedback on the ones where Pat interviews people than we do when it's us. So it's good with me. I don't know. Yeah. So I think we had a couple other things planned, but then we were starting to get some nervous calls from clients over the last couple days, and the headlines have been rather extreme. New White House, new Congress, new policies, new regime, and new market sentiment. It seems. So I definitely have some thoughts. But what are your initial thoughts about what's going on in the world as it relates to the economy and markets? We don't need to go on our own political soapbox here.
I'll start this conversation of saying, let's, at least myself, and I think you two would say the same thing, not trying to be political, trying to be sensible with our comments, no matter which side you're on. But I think a lot of this has to do, the volatility, with politics right now. And I think it's going to be a bumpy road, whether you think it's going to be great in the long term or terrible. I think most of us, even the ones that think it could be great, it's going to be bumpy.
Yeah, I would agree. I think, it's a little difficult maybe than other times with market volatility to just perfectly thread like a non-political needle when discussing, the current state of things with clients. But my whole take has been a little bit where, look, what I think is an apolitical statement is say what you want, you love or hate the current administration. Their current economic agenda is a little bit uncertain. Tariffs provide a ton or certainly have a lot of short-term uncertainty, whether you agree with them or not. And when markets, which is what they're doing every single day, public markets, they're trying to price in what the next 6 months look like, 12 months look like, 5 years look like. So when you have something that is going to affect earnings and interest rates in a pretty major way, like tariffs can, then you're going to see some wonky movements in asset prices. And I think if you just boiled it down to that in complete simplicity, that's kind of what I think is going on. And I think you take it a step further where if you happen to also be someone who does not tend to agree with the current administration, then you may actually notice the volatility a little bit more, which I think is just normal human behavior. I don't think it's a good thing or a bad thing. It's just, hey, I'm not a fan of who's in charge and I don't love what's going on. And there's volatility. So I'm a little more nervous. That's totally normal. So to me, that's been my take on the last handful of weeks.
All right. I fully agree with what you guys said. And now I'm going to, I don't think you guys will disagree with this, but I'll take a slightly different turn here, which is everybody collectively, and I don't mean this as to disparage anybody that is nervous about the current times, because there are any number of things that you can be legitimately nervous about. But I would say the collective investment community, I'll say that's generally people in our jobs, the press, so on, maybe some individual investors that I see in surveys and such, but I not even focusing on that, is collectively freaking out, technical clinical term, about something that hasn't even happened, but that they think might happen. And I think part of that is, look, the markets are off of their highs. We're looking at maybe 5-6% on the S&P, a little worse on the NASDAQ, a little better, I think, on the Dow and International. But, the type of sell-off we see all the time, every year, almost. And just to give you a sense, I just pulled this up on my screen real quickly here, just to have some receipts here. The S&P 500 was the first one that came up on my screen. You all listeners can pick your index of choice, is currently trading at roughly the same level that it was in November and actually sometimes in December, but let's say right around election day. So we're sitting here 4 months on from election day, and basically that market metric, the S&P 500, is flat after 2 fantastic years. So I would say, looking backward, forgetting going forward, we can talk about that. What's the big deal? Why do you think this is causing so much panic? And we've had flat moves for 4 months all the time. It's not a big deal at all.
Uncertainty. I think it's the fear of the unknown. So let's equate it to a business. Business is going to have some revolutionary new product, new hiring method, layoffs. It's your family. We're moving across the country, selling the house, buying a new one, changing jobs, buying a new car. It's like, uh-oh, is it going to work? Is it not? So I think it's just the consternation of the unknown. But you're right. Year to date, I know you gave those numbers. Year to date, S&P, if we're staying on that one, I believe, is down 2%. And today alone, it's down 1.5%.
Right. So, have we had quarters that were down 2% before? Yeah, like all the time. Fairly frequently.
Maybe it's just we're spoiled. Markets have been great.
I think sentiment-wise, that's where I was going. I think even though 2022 was a really ugly year for stocks and bonds, worst combined year, I think, for a 60-40 portfolio since the Great Depression, everybody forgets it. And I'm not talking about our clients, although I'm sure some of them do. I'm talking about people in our job, the press, whatever. It feels like we've just had good times nonstop for 2 years, which is roughly true. And I think we all got spoiled.
Yeah, I would fully agree with that. I think that's the other side, or the other half of the glass here, is you have 2 years in a row, you just mentioned, Matt, where generally speaking, at least in the United States, stock prices have been in the double digits and more. And as a result, especially for the handful of concentrated companies that we've spoken about, the media's talked about ad nauseum, expectations continue to rise, and then it's more difficult for those companies to meet those expectations. So at some point, you are going to have disappointing earnings. You're going to have things that regular healthy markets trade off of. The inputs are not going to be quite as good. And I think certainly the last couple of weeks have been more politically focused, tariff focused, economic policy focused. But I'm sure everyone remembers not so long ago, I guess it was like a month and a half, where we had the whole AI scare around DeepSeek in China, and how that could unravel or at least toil with the existing AI benefactors. So I think that's still a narrative that exists right now. And those have been the companies that have led the charge, specifically to your point, Matt, the last 2 years.
And I think you hit on another key point there. And this goes back, if we could, speak our own book here for a moment. We've been preaching the concept of diversification. In fact, we've used this term bull market and diversification that we're entering, that we had this amazing run for a decade of a pretty narrow sector of the markets. It's now a big sector, but 7, 10, 15 companies have done fantastically well. And the rest of the market's been okay, depending on where you are, but nothing like maybe to write home about. But that narrow sector that had been leading, let's call it the Mag 7. I just pulled NVIDIA, which is sort of was the darling up on my screen. It's off 40 points from its high on a price of 153. So that's what, almost a 30%, 25 to 30% correction, if my math is correct there. So I think if people got concentrated in just adding and riding to the things that have been doing best, their sell-off, it looks a lot uglier than a more diversified portfolio. But I would even say for them, their rally should have looked a lot better too if they owned that stuff all the way going back. It's sort of, the price of admission there. So, but that, some of those high-flying areas have really taken a hit harder than what the broader markets have.
And on that point, I think, Matt, it's a good segue to maybe just touch on some of the positives year to date, and what, at least in the U.S., you haven't, at least I don't think the average retail investor is getting a ton of information about. But despite political uncertainty and trade wars and all this kind of stuff, if you do look at some index measures on the year, staring at the developed market index of stocks overseas, so Europe and Japan, that index is up almost 10% on the year. And ditto, to a lesser extent, emerging markets, which would include countries like China and Europe, about 5%. So to your point about bull market and diversification, we've talked a lot about, everything outside the US has been a laggard for really the better part of a decade. I don't know if this continues. None of us can. But if you're diversified coming into this year, strict discipline rebalancing schedule, you have pockets of your portfolio right now that don't look so bad, which I think a lot of people forget.
Pat, look, I'm in the business as you guys are. We're here every single day. I knew the international developed markets were doing better. I had no idea that through yesterday, today's March 6th, and I'm looking at it right now, you are correct, 11%, I think, on the year.
And yeah, depending on the index.
10 and a half, whatever it is.
So all they needed was a little bit of a trade war to finally get off the off the schneid there.
Right.
All right. So this goes back to the point. We've all heard it for 15 years now. Why do I own international stocks? Why do I own small caps? Why do I own this? Because you don't know when it flips.
Can I add one? Why do I own bonds? Long-term bonds. And by the way, we missed this one. We had intermediate and short-term bonds. You don't get everything right, but long-term bonds are up 5 or 6% year to date. Why do I own bonds? Well, sometimes they actually make money. It crazy as it sounds. And it often can be when stocks aren't, and not always, but often.
Yeah.
The reason for diversification, you got to have your hand in each bucket just to a degree for these reasons.
Yeah. Not to dance on graves too early, but I know it's an activity I think we actually all three enjoy sometimes. Is some of the consensus that was going into the year in December in the beginning, just a handful of months ago was, America first policy with Trump. You're going to potentially see higher inflation that leads back to higher interest rates. And as of this moment, to your point, Matt, it's been the opposite. We're, projecting maybe worse economic conditions, which translate to lower long-term interest rates. And as a result, higher bond prices, which is exactly what's occurred. So, just another reminder as to, listening to the talking heads and positioning your portfolio as such at the beginning of the year. I think more often than not, I feel confident saying leads to disaster.
And that I fully agree. And I think that's a good segue maybe to the second part of the podcast of what do things look like going forward now? And how, and we've already addressed it a little bit, but how should the markets, investors be handling this rather uncertain environment that we're in?
I'm going to let you answer your own question.
So number one, stay diversified. And I keep, anybody who's been on calls with us recently, watched videos, so on, we keep hammering this point. I keep saying you don't want to stick out too far in any one direction. And I think sometimes people take that as don't own just Mag 7 or the big tech stocks. Fully agreed. You should own them and many other things, a diversified portfolio. But it also means you don't want to go and say, I'm going to go all to cash in short-term bonds and just wait this out until things calm down. First of all, no one can predict the future, ourselves very much included. And secondly, you really at that point have to be right twice. I'm right to get out, and I know I'm going to know when to get back in. And further to the point about diversification, who says that being all cash is a great diversification strategy? What if inflation picks up again? Your cash is now worth a lot less, and maybe some assets have done quite well in that environment. I don't know. So my point is stay balanced, stay diversified, and to the point one of you just made, tune out the headlines best as possible when it comes to your finances. If you want to get involved politically, I'm not going to, discourage activism for those who believe in causes. But, we got some questions both internally at the firm and externally, with all these tariffs and the market sell-off, why haven't you put out a video yet? And it's like, well, our schedule hadn't come up to put out a video yet. And we live in this environment. If we put out a video every time that Trump says something that causes the markets to go a little nuts, we're going to put out a video every half hour and you guys are going to get real sick of us real soon. So I would say just, calm down a little bit. It would be my general advice, and keep calm and stay diversified.
Yeah, I think to your point, Matt, too. It's that's a symptom, and it's not a good or bad thing. It's just a classic symptom of behavior and human reaction to things. Is this is ignore the political landscape, which I know is very difficult to do. This is like a garden variety market volatility event. Like we're barely down 10% in any of these indexes. So you can't even call it a correction. You can't call it a bear market. You can't call it any of these things that might elicit a little more justified panic. But this is coming on the back of 2 years of nothing but rosy 2+ years of nothing but rosy markets. That does something to your psyche. Hey, all I expected is markets to go up when I log into my brokerage account screen. And now that's not happening. But this is very normal volatility kind of thing. So just hammering that point, I think.
Let me piggyback in a different direction. All of us are saying, hey, calm, diversified, let's not overreact. Let's also not overreact if you are in favor of the current administration's new policies. I'm going all stock, all U.S. We're in. Maybe, but maybe that's not the right move. Maybe that doesn't meet your goals. What if there's a chance you're wrong? Look, it's just the same thing that we just mentioned about international stocks. Hey, let's just be there just in case. Same thing here. If you're ultra scared, try to rein it in, come back to the middle. If you're ultra bullish, okay, let's not get overextended for the same reasons.
Fully agreed. It's a good point. Exuberance is often overlooked because we always talk about fear and panic as things to avoid, but you're absolutely right. And the only thing I would say from a preparation standpoint is not to the earlier premise of the call or of the podcast. Not much has happened yet. We're basically sitting where we were on election day. So if you have become overextended, you have not enough cash, you too much, if someone has leverage on their portfolio, or you have big expenditures coming up in the next year, it's not too late. Let's put money on the side, and to prepare for those things. But this is not a time, to your point, Aaron. I don't think it's ever a time to panic or get super exuberant, but this is really not a time, in our opinion, to do that.
Yeah, I mean, I'll give you, Matt, a pat on the back for something you said a couple times since the election, which I've stolen from you a few times. Is look, markets often trade off of better or worse, or they always trade off of better or worse, not necessarily good or bad. And it felt like since the election itself, it felt like it could be a bit of a buy the rumor, sell the news event. And maybe that's almost exactly what we're seeing. Like we had exuberance through the election. Oh, everything's going to be great. Markets go up. And then when reality has set in, things have been a little bit more awry. And that's exactly what you said. So credit to you for having a good perspective on things.
Much as I appreciate the credit goes to Richard Bernstein. I took that line from him, but it's a good one.
Well, thanks, Rich.
So we're almost 20 minutes in, as we always try to do, not to make these things go too far. Do you want to spin this into what's happening on the personal side? Maybe a Hoagie review, if you guys would like to have one.
Yeah, I think we should do the review, and I'm still going to leave it to you to do the review, even though I partook, because I don't even remember the name of the place.
All right. On that note, Pennas Italian Market, Lower Gwynedd. I've been there a couple times. I don't know if I've had a Hoagie before, but in this example, all three of us sampled both turkey and Italian. I was just mentioning this to somebody a night or two ago. So this is after the fact. Someone mentioned, and I can't verify or not, but they make their own rolls, which I know is always a hot topic on the Hoagie in the Hoagie world. And this actually, the rolls I think do really drive the score and the narrative of the Hoagies. So we did a turkey, I believe, on a seeded roll and an Italian on not a seeded roll, or vice versa, whatever it was. First off, these things were massive, like a newborn baby size. Like and that's sometimes good and it's sometimes bad. I think it actually detracted a little bit.
I agree.
It was a hearty roll, a lot to get through. I think the Italian was better than the turkey, whichever it was that had the smaller roll. I can't remember if that was seeded or non. I don't know. Do you guys recall?
I definitely remember the Italian being better. The turkey was hard to get through. It was just
massive. But look, it's fresh ingredients, a lot of homemade stuff. You can't knock them for that. I think you got to give them 2 grades. I think that the turkey was good, but it detracted was the size of the sandwich, hard to get through. I think that's more in the 7-1 range. It was still good. Italian, I think better, more flavor to it, easier to get through, a good bite still. That's not in your 8s yet. That's more like a 7-7, I'll call it. So Pennas, I think there's some refining to do. If you guys want to put any comments in, feel free. But those are my feelings.
Yeah, I feel. I think that's totally fair. I would go. A for effort, B for product. I think I don't want to knock them too much for like giving good value and good ingredients and too much of them. But it was too much. it was just too much. But the Italian was quite good.
I agree. My only comment is I think 7-1 is the right score. It's like it's a Hoagie that'll get the job done if you're hungry for a Hoagie. Like it'll scratch the itch, but you're not like walking away from that like, man, I'm blown away. Can't wait to tell my friends about this place.
Yes, exactly. And I will say I went to the Sixers game with my 16-year-old the other night, and we stopped in South Philly to pick up cheesesteaks. I won't give a full review other than I advise against eating cheesesteaks in the car because my car still reeks of onions. I have to get it washed. Before we wrap, anything you're reading, listening to, watching that we should throw out there for the listeners?
I started Lioness.
I like that.
I liked it, but I'm debating stopping. I got through 3 episodes, maybe 4 episodes, and it's a little too stressful, too out there. Sometimes I need to rein it back in. So we watched another first episode last night. It's with Kate Hudson, basketball team. I think they're talking about the Lakers, but they're the Waves. Do you know what it's called? Point guards.
I've seen it. It's Netflix, I think.
Netflix.
Yeah.
So I went from Lioness to this. I'll report back with more, but a lot less stress with Kate Hudson than Zoe Saldana, who just won that big award the other day. She's awesome in Lioness, but
yeah, she's great. But it is not a low stress show. I agree with that.
Two of my more favorite recent shows are back in. I think you guys, at least one of you guys, watch them. White Lotus on HBO is back, and so is Severance on Apple TV. Thoroughly enjoying both mid-season for both of them respectively. And for anybody who hears about each of those shows but haven't taken the plunge, highly recommend. I think they're both in different genres, two of the better shows that are currently airing right now.
Cool. I'm 1 for 2 there. I do watch White Lotus. I've never been able to get into Severance, though a lot of people love it. I will I'll go a different direction. I was in our nation's capital and surrounding areas yesterday, meeting with some clients. So I listened to a lot of podcasts on my car ride back and forth. And I'll go back to where we started the podcast with politics. Michael Smerconish, Philly native, CNN contributor, and kind of national political guy, has I think it's his daily Sirius XM show. They have like a half an hour podcast, but once a week he has on Mark Halpern, who has been no stranger to controversy in the past in his personal and professional life, as I understand it. But either way, they have interesting conversations. Yesterday was a 10-point list that Halpern had put together of why Donald Trump, as a politician, forget his policies, all that kind of stuff, just as a politician, is reminiscent of Bill Clinton in some ways. And I will say, I like hearing podcasts that challenge my own views. And if you're a Republican or a Democrat, there was plenty on this episode to make you annoyed and angry. So I would suggest listening to it and seeing how your views change.
That's the point of podcasts.
Right.
Hopefully not ours, making you
like there are
angry, but...
Right, there were parts I'm like, is he kidding? And then like there are other parts like, he actually makes a good point. But anyway, all right, I guess we should wrap here. But we have a great guest coming in April. That's all I'm going to say right now. So more to follow.
A lot of good fun announcements coming up for those who are clients of Amplius.
And who are not.
And stay diversified.
That's right.
Thanks, guys.
All right, thanks.